Folks, I'm going to teach you something really, really important. And it's going to seem really simple. And you're going to be thinking to yourself, gee, Roger, you're supposed to be this great trading expert. You're supposed to know all these complicated things. But sometimes simplicity can be brilliant. It really can. So I want to teach you something that a trader taught me many, many, many years ago. And it's something that I've used as a barometer or a compass of the market. And I've said this many times before, but I'm going to show you something. All right. Now, this is the basic premise. The longer the stock market behaves a certain way, there is a extremely high probability that it will shift focus. Now, does that mean go from going up to going down? No. Got to understand something. Stock markets or stocks, they're predominantly counter-trending assets. What does counter-trending assets mean? Well, currencies and commodities, they go up, they go down sometimes months, years at a time, but stocks don't do that. Why? Because there's too much random data surrounding the stock market, and it causes lack of information, and lack of information causes random price action. And fortunately or unfortunately, depending on how you look at it and depending on what strategy you trade, the markets are sideways or trade sideways about 70 to 75% of the time. I know you're thinking to yourself, how could that be? Look at this trend, the stock market. Look at the S&P 500. This is a trend, right? That's daily data. Look at 10 years. This is a trend, right? Well, the rule is this: the longer something behaves a certain way, and for all of you folks who are into the Elliott wave and the Gann lines, I don't believe in any of that stuff. And it hasn't tested out, and no fund manager in the history of the financial market has ever applied it. So if you use those 5 waves or 3 waves or 100 waves, throw it away. It's useless. The only thing the market does is it moves directionally and it moves sideways. And here's what you need to know. Write this down. Remember this forever. The longer the market moves directionally, the higher the odds that it will change or shift and start moving sideways. The longer the market moves sideways, the better the odds that the ensuing breakout, regardless of the direction it'll be in, because we don't know what direction it'll be in, but whichever direction it will be in, it will be a sustainable movement. Let me give you a good example of a real-time example of that. Small caps, for example. If you look at small caps, if you look at the Russell 2000, and I'm going somewhere with this. If you look at the Russell 2000, this is a congestion. Throughout 2019, the Russell 2000 was completely congested. And I told anyone who would listen, I said, as soon as we have a breakout, and I didn't say which way it was going to go, but I said as soon as we have a breakout, and I believed it was going to go up because I believed trade war was going to resolve, but that's just my opinion. The bottom line was I said that the trend that develops from here is going to be very strong and very, very powerful, and we're seeing that right now. And the odds are that this trend will last a long time. But if you look at the SPY, at the large caps, the S&P 500, you will see that the market is extended. Look at this trend. This is a strong trend. And what this is telling me is that the overall market, the broad market, is going to enter a consolidation or a range-bound cycle because we've been trending too long and too hard. Now, income strategies love sideways markets. They love high volatility sideways markets, and I believe that's what's going to happen. Because here's the thing, markets go up and down and they go sideways, and we are way, way overdue for a consolidation. The markets are tired right now. They are grossly overbought. Look at these. Every time you see this blue, markets are an overbought level. Throughout all the way, September 2019, we're reaching those levels. And for the second half of this year, that rubber band has been stretched out. So imagine you have a rubber band, and the rubber band's here, and it stretches out, stretches out, stretches out. It's got to contract before it can pull back again. Well, the market hasn't been doing that. It's just been pulling back a little and stretching back, pulling back a little, stretching back. So there's 2 ways the markets can cool off or the rubber band can consolidate. One way is we can have a down move. And the other way is we can have a strong period of consolidation. And I believe the markets, as you could see right here, are setting themselves up right here for a period of consolidation. We're not really moving higher because the markets are tired. It's like running around the block and not resting and then running around the block again. Unless you're an athlete, an Olympic athlete or a professional runner, you're going to get tired. You're going to need a break. And the markets need a break. But here's the thing. That means there's a good chance that for a good amount of time in 2020, we're going to see congestion and consolidation. And the markets are going to go up and down, up and down. Volatility is due to increase as well because of impeachment, because of trade wars, because of Iran. So volatility is going to be running rampant. And that's good because you're going to see premium in options. The more volatility, the higher the premium and the less risk, which is great for income traders. But the second part of this is choppy markets. Nothing is better for income traders than choppiness. And I believe large caps are grossly overdue for a choppy market simply because we're seeing divergence. Notice we're seeing higher highs here, but the levels on the momentum are getting actually lower. That means we're seeing divergence, we're seeing overbought territory, and there's really no catalyst for the market to go higher at this time. But with that said, there's really no catalyst for the market to go lower either. Interest rates are near historic lows. Trade wars being worked out. So and we can see other signs, not just technically. This is looking at technical price action. If you look at sectors, the 10 major sectors, and I've said this many, many times, technology and consumer discretionary should be next to each other. They're not. Sectors are fragmented. Consumer staples and utilities should be all the way at the bottom. Consumer staples and consumer discretionary should not be next to each other. One is things that people buy when they have a lot of money, and the other things people buy because they need, like toilet paper, toiletries, things like that. So the sectors, if you look inside the market on a sector basis, they look very fragmented. If you look at the market on a technical basis, the market's fragmented. And if you look at momentum levels, as I'm doing right now, it also looks fragmented. And that's telling me the markets are tired, and before we have another run up or down, the markets are going to consolidate. And consolidation and volatility equal the best possible opportunity for income traders. So if you guys are income traders, don't miss out on this opportunity. These type of opportunities don't come every year, and 2020 looks like a solid opportunity for solid income. Folks, let me level with you. Just because I don't expect the market to make triple-digit growth in 2020 doesn't mean you can't make significant profits this year. In fact, there's a lot of money to be made from choppy and volatile markets. And that's why Rob's timing couldn't be any better. He just put together a video. This video shows you how to execute one of the best strategies for range-bound markets. Now, to prove how well it works, Rob even shows 3 regular traders how to collect $784, $903, and even $1,150 with just a few minutes of training. Literally, just a few minutes. This is not complicated. You can get step-by-step instructions on how this strategy works by clicking the link below. Watch this video. Today's the final day it'll be up. So make sure you click below to watch it now before it's gone forever. Talk soon.